I mean, in the last cycle, we saw people standing outside the Silicon Valley company shuttle stops with Krispy Kremes. They were renting taco trucks and standing in the parking lot of these companies. And it looks like this time it's going to be the same again. People are flyering. They're all over social media, tagging their posts. IPO, Facebook, Pinterest.
Wow.
Yeah.
So these are real estate posts that they want to catch the attention of these new millionaires. Now, you mentioned what happened in previous big IPOs like Facebook and others. But the interesting thing that you point out is a lot of that was Silicon Valley centered. A lot of these companies now are San Francisco centered. And I was floored when I read in your piece, there's only about 600 properties currently for sale in San Francisco. Is that right?
Yeah, during previous cycles, we've seen IPO money dispersed far more widely around the Bay Area. But most of these companies, Uber, Airbnb, Pinterest, et cetera, are all based in San Francisco proper. And, we're working under the presumption that if you work in San Francisco, you may want to live in San Francisco.
Sure, especially if you can afford it, which nobody can do these days. But if you're going to be making millions, maybe multi-millions, are people, how are they preparing for this wave? So I think we saw even the number of listings fall. Is it because everyone's holding back and then going to get ready to list them at once, or is there simply a shortage?
Yeah, it's interesting. It's sort of a preemptive, figuring out what's going on. The buyers are starting to feel antsy. They're wondering if they wait, will they be faced with a lot more competition in the market? And the sellers are actually pulling back, and they're calling their agents and asking, should we wait and list in 6 months because we don't want to miss the height of the wave?
And is it possible that everyone's going to miss this because they go, oh, we're sure this is going to happen and therefore it must happen? Is it possible that, how do you think this might really play out? Because a lot of people have lockup periods of their stock for 6 months, or they may want to hang on to it for longer. They may say, I'm going to hang on to it for a couple of years and then go cash it in Omaha or something.
Well, it's interesting. It really is probably going to be along a more prolonged period of time. A lot of people are saying we're not going to see the bulk of this until 2020. There was a UCLA professor who did a study recently on IPOs in California, and they said that they saw a bump at the time of the filing, they saw a bump at the time of the listing, and then when the lockup period ended. But it really, goes over quite a long period of time.
And again, for San Francisco, there's a very small area where they can really, they can't really build, right? So what do you think is likely to happen to that market with all of this demand and nowhere to go?
Well, there was a pretty baffling statistic the other day that came out of the real estate company Redfin. They calculated that based on Lyft's IPO price, which obviously has dropped, but it was $72 at the time that they listed, their employee and former employee pool would be about $1.5 billion, which is actually more than the collective value of every single property currently on the market in San Francisco. So, wow. I don't know if that's overstated, but there is some hype going on. Okay.